Okay, so just so you guys can kind of gauge the, all right. Okay, so I'm not going to introduce my panelists. So guys, take a couple of sentences to say who you are and how you fit into the system when you talk. But George Kikwadze, I'm going to start with you. You are one of the founders of, I would say, one of the absolute biggest players in the cryptocurrency ecosystem. And not only that, but in a kind of a holding company sense, you have so many different verticals where you play in this ecosystem. And so could you maybe give us a little bit of a sense of the history and how it kind of grew up and how you've observed it from the Bitfury kind of lens, and then also just kind of where do you think we are now? I'll come back to you guys to give some sort of future predictions, but just kind of give us a sense of like how have we grown up and where are we to now?
Yeah, so Bitfury is a fully integrated blockchain technology company. We have both hardware and software, and recently expanded into artificial intelligence. The root of the company has been from mining Bitcoin. It's a very important operation in the ecosystem from the standpoint of verifying the blocks and keeping the network decentralized. And company will celebrate actually 9th year this week. So we're very proud of what we have done. We have Mike Novogratz, our investor, who has supported us all along, and many others. And from the mining side, we expanded into software and providing blockchain software applications, which we believe will have a great opportunity in terms of expansion and artificial intelligence. Now, in terms of where industry is, Bitcoin's been for 10 years, and it has every day it's growing. There are more users. There are more applications are being built. It's the largest, most decentralized, censorship-free, immutable ledger onto which transactions do happen. And the ecosystem is very robust. It's growing, and we believe that it certainly has come a long ways from where it was 10 years ago, and it has a very bright future.
Okay, let me dig into a couple of things you said. When you say software, like what do you mean exactly by software?
So, we believe that there will be massive monetization, capitalization of applications being built on top of a sort of a public blockchain or Bitcoin blockchain. Internet was all about World Wide Web. This technology, I think, is all about worldwide ledger. So you can start taking any digital representation of assets, of votes, of certificates, of land titles, and start putting it on this immutable ledger, which is censorship free. It cannot be changed, it cannot be altered, and it can be stored there for as long as you need it to be stored. And I think there will be so many applications that are currently built, and there will be more being built. Think about internet-enabled, so many apps being built on top of it that are driving the world economy. In the same way, this is the next level where it's not going to be about exchange of information. It's going to be about exchange of assets and value, and it's going to be, in my opinion, more profound than that of internet.
And so the software sort of investments are about that kind of layer, that interface layer, to make that happen more easily. Is that sort of?
That's correct. Yeah. And so, for example, ChainAlysus is a perfect example of a company that is a leader in the software space, building out KYC AML applications. So, enabling a lot of transactions, and enabling a lot of sort of a value being seen, transacted, and monetized. And there are thousands of companies of this sort that are working, experimenting, developing sort of the applications on top of public blockchain and other cryptocurrencies present here as well. That it's so exciting. It's an open source movement, and when you get a lot of smart people in a room, magic happens. And that's what happened with internet, and that's what's happening with blockchain now.
Okay, but I guess my question to you is, if everything is kind of so positive in your view, why are you so furious?
I'm not furious. I'm very content with where we are, but you cannot be complacent. You always need to keep pushing, keep persevering, and keep building. Building a company is a very challenging thing, and building a company in a sort of a decentralized fashion where there are new ideas, new technologies, and you constantly need to monitor and pivot and adjust. It's a lot of fun. So you need to be furious, you need to be resilient, and you need to be adaptable.
All right. Okay. Sounds like the ledger itself. Okay. It is true, Mike Novogratz, that you really are I think I would give you a lot of credit for just the evolution of the space and the fact that people pay attention to it. I mean, when you pay attention to something, people pay attention to the fact that you're paying attention to it. And you got in very early and very kind of publicly, and you're a very important, I would say, spokesperson for the space generally. What attracted you to it in the beginning, and what are you kind of making investments in now, and where are you sort of seeing the evolution and where we stand now with it?
Well, you know, it's interesting because I was here 2 years ago and this room was packed and it was right at the top of the bubble. And then last year, not as many people, about the same as this year. And so that's actually not a bad sign. And what's interesting is 2 years ago, most conversations I had, or even 3 years ago, people were trying to decide if this is a real thing. Is this idea of a decentralized store of value real or not, or is it going to be like tulips? And we had a crypto market crash. We had a crash for a lot of reasons. One is there was just too much hype, but also everything that got issued was the next Bitcoin. And so you had Bitcoin, which was the first decentralized store of value, and then you had Ethereum and Litecoin and 500, 1,000 other coins. And so like any market, when there's a giant supply response, prices collapse. And it was a combination of that supply response and regulators getting nervous. And so we had this horrific bear market in 2018. The market went down 88% in Bitcoin and all over crypto, closer to 95, 96%. So pretty much wiped out. And what's been interesting is the conversations I have today with institutional investors, with wealthy guys, aren't about is Bitcoin real or not. Miraculously, it's crossed that hill. Now it's Bitcoin as a weapon in a macro portfolio. And do I want to put it in? And so I can name 20 billionaires, from Abby Johnson at Fidelity to Jack Dorsey at Twitter to Pete Brigger at Fortress to Wences Casares and Mickey Melka, who runs the best fintech business in the world, that all are believers in Bitcoin, that all talk about it. Bill Miller. These guys didn't make their money in crypto. They made their money outside. They're world-class investors that say, hey, this is important. The Yale Endowment, the Harvard Endowment, the Stanford Endowment have made investments in both blockchain and Bitcoin. And so Bitcoin has kind of found its role as a digital gold. Gold's an interesting thing, right? You can take all the gold that's ever been mined in the history of the world, and it fits inside this room in about 3/4 of the room. All of us could get on this stage and we could look at all the gold that's ever been mined in the history of the world. And that's worth almost $10 trillion. Like, this is a rich part of the world, but that's a pretty expensive statue. Gold's it's a social construct. It's valuable because we say it's valuable. Bitcoin is kind of a miracle. It's a code. It's a one-page paper and a code. And it's now worth almost $200 billion. And that's in 11 years. Bitcoin is a store of value. It has got worth because we say it's got worth, not because what we use it for. That's really unique. There are very few assets in the world that have store of value, just because. Most assets have to be used. I separate cryptocurrencies into Bitcoin, which I think is a finished product, and the rest of cryptocurrencies, which are use cases that are still to be proven. Some are have spectacular possibilities. Something is going to be the trust layer that lots of stuff gets built on, that's programmable. Ripple is trying to be a payment rail for all the money that sits in between the banking system. And so I look at those as more venture bets, and some are going to win and you're going to win big on, but that's 3 to 4, 5 years away, where I see Bitcoin is now. And what I see is more and more adoption. I don't think the sovereign wealth funds are going to wake up tomorrow and buy Bitcoin. And I don't even think the big pension funds in the United States are going to. They're going to take small steps in probably blockchain investments. But I do think the 50 to 80-year-olds who haven't bought yet, right? The bulk of the wealth in America and in the world is owned by old people, right? The bulk of people that have participated in crypto are young people. Like, ask any 60-year-old if they have a crypto wallet on their phone, and they're going to say no. And so what's happening now, and what's very exciting for the system, is plumbing is being built to connect the traditional registered investment advisors, the Fidelities, the TD Ameritrades, the big institutional money that covers the 50 to 80-year-old wealth in America and abroad to this system. And so the two most important things that happened in crypto in the last year were that Fidelity said they could custody and the New York Stock Exchange said they could custody. And all of a sudden, I feel safe buying my crypto, just like I need to feel safe buying my gold. And so when I look at this macro environment, right, we have a US trillion-dollar fiscal deficit. That's 5% of GDP at a time we have 3.5% unemployment and 2.5% to 3% growth. The last time we had 3.5% unemployment, we had a 1.5% fiscal surplus. And so we have wildly irresponsible fiscal policy. We have wildly low monetary policy around the world. Long bonds are 5 basis points from their all-time low. And so the debasement of fiat currency, the market smells it. Gold doesn't go down anymore. Right? If you watch the price of gold, it goes down a little bit and stops and goes up. I have 5% of my net worth in gold. I have more of it in Bitcoin. And so I look at Bitcoin as a macro hedge. The investors I speak to look at Bitcoin as a macro hedge. I don't advocate people to put more than 5% of their money in Bitcoin. I do because I'm in the market and I like a lot of risk. But I do advocate 1% to 2% of their money in Bitcoin. It's more volatile. It's probably 6 times more volatile than gold. But it has a lot more upside because the adoption has just started. And we see more adoption every month. And so the way it trades this year is wonderful. It trades up, down a little bit. You can tell there's a real bid below the market. And so to me, it's one of the great risk-reward bets right now is to put 1% to 2% of your wealth in Bitcoin.
Okay. There's a couple of follow-up questions I want to ask you, but I think for now I'm going to go from sort of mic to mic. So Mike Groninger, I'm interested in how you started ChainAlysus, and I know the story, so I want you to kind of tell them a bit of the Mt. Gox story, and then I want you to answer the question of, is this not a place for like crooks and thieves and drug dealers and dark web? And I mean, obviously a little bit it is, or you wouldn't have a business. But what do you, how did you kind of think about it? What are you doing about it? And how do you? I mean, if anybody, I would say on this panel, well, I guess I won't say that, but you are one of the key people on this panel for making the title of this panel maybe legit. Like, is cryptocurrency finally growing up? You're going to be largely responsible for that. So just can you tell a little bit about the opportunity that you saw and how you've kind of built this company and what you're trying to do?
Cool. Yeah. So back in 2015, 14, 15 or so, we came in after Mt. Gox. That was the biggest exchange in crypto back then. It went bankrupt. All the money were gone, and no one really asked the questions: where did this money go? The assumption were that the founder of Mt. Gox, or one of the founders of Mt. Gox, have stolen the money, for example, and he got arrested by Tokyo police and were in jail for a long time and so on. So it was a little bit complicated. I got involved in that case early on, signed up with to be the investigator for the bankruptcy trustee of the exchange. And in that capacity, I dived into the things, looked at what actually happened, and figured out that all the funds were stolen over 2 years by most likely like a small group of hackers. That group of hackers have actually set up an exchange themselves to launder the funds. And one of the main people have actually got arrested a couple of years ago. But we started very early on. I started work with the law enforcement around the case, and that meant that I couldn't talk that much about it. But also in that capacity of working with law enforcement, it was very clear that law enforcement were desperate and concerned about the prospect that cryptocurrencies would enable everyone in the world to transfer funds anonymously all over the place. And the regulation that were being talked about back then were basically, well, we need to shut this down because this is simply too dangerous. So that also led me to dive deeper into crypto and how it was set up and so on, and actually understanding that this is not an anonymous currency. It's kind of pseudonymous. You can transfer it between different people. But a thing that you don't really realize if you just read the white paper of crypto is that it also handles in a very scalable way the fact that you cannot take IDs from 7 billion people and actually do that in a scalable way. But the fact that you can trace where the funds come from and who you have been transacting with means that you can risk score everyone and kind of get a good assessment of whether this is a high-risk transaction or a low-risk transaction. And that actually means that now we have a completely other way of regulating crypto. It means that now we can actually not regulate crypto as cash, meaning like we don't know at all where they come from, but we can see the history of crypto, and we can then see like the single transactions, if they're high risk, if they're low risk, and so on. And that meant that law enforcement have been able to solve a lot of cases. It also meant that regulators have treated crypto in a more favorable way and a more clear way over the last couple of years. And it meant that we've seen a flourishing business today in terms of like what happens in crypto in general. So for example, back in 2016, the first crypto company got a bank account from a tier-one bank, the Barclays, all using our software, showing that this was actually a possibility. And from there, everything started to grow because the problem around compliance have largely been solved.
Okay, so who are your clients?
So clients, like roughly half of our clients are government agencies. We have government agencies of various kinds in more than 20 countries worldwide. US is, of course, one of the bigger ones. We have crypto exchanges. Basically all the exchanges today use our software to do transaction monitoring and risk score and risk assessments and so on. And further, we have regulators as customers. And then there are banks who want to either build out a potential portfolio on crypto, but also banks that want to bank crypto businesses or even become a crypto business themselves. They are customers of ours as well.
Okay, so and what products exactly do you offer? I mean, you kind of do investigative work, but you're also doing kind of filtering type stuff. Is it the same?
Yeah, so like we don't really do the investigations ourselves anymore. We have a small team of very smart people who can do that. But we basically sell software that enables law enforcement agencies to do that. So that's one product. The other product is automated transaction monitoring. So basically, if you have hundreds of thousands of customers on an exchange, you can't throw people after the problem. You simply need to automate. And that means that we can risk all the transactions and the customers and create alerts and have a workflow system around the compliance there. And then the final product is more like a 5-mile view of the industry, where we can risk assess the different companies and so on, mainly for banks.
Right. If you want a very interesting kind of industry overview, I would say that your annual report is quite a good read on this. Okay, Navin, you know, in the beginning, people were sort of, it was like kind of like Bitcoin, Ethereum, and Ripple, really, was if you didn't know that much about anything, you at least knew what those three words were. Tell us about Ripple, and what kind of niche here are you going after exactly? And what do you think kind of the use case is for you? And then as a side question, what do you think of Mike's assessment of your valuation?
So firstly, I think a lot of people get confused. So Ripple is a software company. We are a private company. And XRP is a digital asset which is open source, which is available, which Ripple owns a percentage of. But these two are different. So tomorrow, if Ripple was to die, XRP will still have a life of its own and will remain a digital asset because it's an open source ledger that everybody can build on and use, right? So at Ripple, fundamentally, we are solving the problem of friction in cross-border payments. So today, if Stacy needed to send money to me, if she needed to send $100 US, it will probably cost her more than $100 US to essentially send that to me.
Why is that? Like, what's the problem with the international correspondence banking system that you're trying to disrupt?
Absolutely. So we are fundamentally solving for three things, right? So one, which lots of other people have worked on, so we are not working on that, is customer acquisition, where digitally now customers can get acquired. So that's a lot of use cases that people are working on. The two problems that we are mainly solving for is cost of liquidity, right? So when money needs to move, as you know, say, for example, somebody sending money from UAE to Kenya, it'll move from AED into US dollars into Kenyan shilling. And a lot of time, a very large amount of your principal will get lost just in terms of movement of this foreign exchange. With Ripple, with our software, and it's already live between US dollar to Mexico corridor, it'll move between AED to XRP and XRP to Kenyan shilling, and with which the loss will be quite minimal, and with which we can certainly say that the cost of remittance will go down, because it's far more efficient way of transferring money because there is no nostro accounts that are required. As you know, there is about $5 to $10 trillion of capital that banks keep with their counterparty banks in the destination country to make these transfers possible. So that's the big liquidity cost that we eliminate. The second thing that we eliminate is the cost of errors. As you know, the infrastructure or the plumbing for the international payments was built 50, 60 years ago. It still runs on, you can call it telex technology, right? Whereas the new infrastructure for the internet world, it requires an API-based software system which Ripple pioneers. And a combination of both these things put together should bring the cost of remittances down, which has stubbornly been at a 7% range. Can you imagine all of us earning in the room, and most of us are could be foreigners to UAE, lose 7% of our income just because we are transferring money from one place to another? I mean, to my mind, it's unacceptable.
And there's a kind of two worlds maybe, and companies. There's sort of the public blockchain, and there's the private blockchain. And you've set up this private blockchain. Not that many of the private blockchains have survived, I would say, as well as you have. And why did you decide to come up with your own kind of token or currency to get this done? Why didn't you use the public blockchain? And how should the audience think about that choice?
100%. So firstly,
because you're not. Just one more thing. You're not. I mean, and nobody. I think none of your banks would want you to be this kind of no leader and no decider and completely, unregulated. Nobody would want that from you. But let me.
Yeah. So first of all, we are not into science fairs, right? So we are not building on the top of blockchain or building a blockchain with which we can win an experiment and then everybody claps, right? We are here for the industry. So when we went to the banks told us, right? So if we are transferring money, so a bank A is transferring money to bank B, it wants nobody to know. It wants the transactions to be private. Of course, it's fully regulated by the law, and they have capital adequacy and audits and everything that can happen through the regulator, but they don't want it on an open blockchain. So we took elements of the blockchain and build enterprise-ready network that banks would like to use. Because fundamentally, we believe if you want something to be mainstream, something to gather trust, then you have to work with the system. You have to work with the regulators. You have to work with the participants in the system, which the regulators have enabled, and that enterprise-ready blockchain needs to be useful for that. So that's something Ripple has built. We have 300 institutions already using us. We acquire 2 new institutions every week, and the network's growing. And they see something in the network to be participant on it and to pay us for the software to be part of it. So there's definitely volumes that's growing, and more people are joining. The second thing is that doesn't preclude them from using parts of public blockchain that are useful to them. So for example, in the FX world, not all banks are FX banks, but most of the banks do remittances between each other, but they would buy FX, or they would do the trading for the funding with one of the large FX banks. Similarly, you could use XRP to make the transfer possible, so you don't have to have the Nostro account out there so that your liquidity is stuck. So that means at 12 o'clock in the night, when you need to fund a position in another country, you could just buy XRP from a 24/7 exchange, and it can get converted into, say, for example, Philippines peso at the destination. Again, on demand, few seconds, everything gets completed. You don't have to wait. You don't have to keep idle money in there. And with that money that you save, you are able to bring that back to your shareholders or to your customers who can use it. So to our mind, we don't see a contradiction. We see both these interacting with each other and at the same time producing the best solution for the people out there, for the institutions out there. Because yes, we can win the science fair, but if it's not useful, then we'll be a bankrupt company very soon. But if we have built something that is useful for the people, even if purists don't describe it as public blockchain, private blockchain. To us, it's rudimentary. It really doesn't matter. The proof of the pudding is customer demand. The proof of the pudding is, does it create value for the audience that we are serving? And the answer to that is big yes. And that's the reason we are our whole heart into it and building it out.
Mm-hmm. Okay. Whole heart's good, I guess. Definitely. You can't do anything without whole heart. Okay, Simon, I want to stay with this kind of theme of use cases, if I may. So Simon, in South Korea, first of all, congratulations on the Academy Award win. That's you guys must be very psyched about that. What is exciting for you people do talk about Korea as a very kind of hot market for crypto. Why is that exactly? And how are you, tell me about the kinds of companies that you're investing in. You're kind of a VC, early stage investor. What gets you excited? What kinds of companies do you think look exciting? And where do you sort of see it going in terms of use cases for it going forward?
I'm the only Asian panel here, so I want to emphasize the importance of Asian market in the blockchain slash crypto space. So I believe Asian market is the biggest market in terms of many stuffs. So there are so many big blockchain companies, and there are huge portion of the big crypto exchanges and also big crypto projects are based in Asia. I think the number of big crypto exchanges are much more than West in Asia. So the reason is there are much more people in Asia who understand the value of digital asset, and also there are much more people aggressive to find new opportunity to invest with this new asset class. For the Korean market, from late 1990, when the internet era started, there were so many innovative services started from Korea. For example, the world's first online gaming RPG game started from Korea, and 5 years before Facebook started, there was a nationwide social network service in Korea named Cyworld. And the most important thing is Cyworld had its own virtual currency named Arkon Coin 20 years ago. So that means even more than 20 years ago, every single South Korean people used Arkon Coin. So we decorate our virtual avatar, or we can decorate our virtual room to buy virtual furniture or buy background music of my mini homepage to show my friends at that time. So, and also the world's first gaming item exchange business model also started from Korea in 2001. So I think digital gaming item exchange model is an ancestor of the older crypto exchanges. It's a first model of digital asset exchange in the world. So how this was happened? Because from late 1990, we had the world's fastest internet connection, and also the smartphone penetration, mobile phone penetration was the highest in Korean market. So at that time, the speed of internet in United States and also Western countries are very low. So it was very hard to develop an application with graphic or some kinds of video. So at that time, we know that some of the major application in West was only about the text. But in Korea, there were so many applications using graphic and heavy application for the mass users. So it's our own heritage. And the other reason is actually it was 2001. There was a nationwide gaming portal named Hancoin. So at that time, Hangame has its own virtual currency named Hancoin. So they had a half of entire Korean users at that time, and actually it was the biggest gaming portal at that time. And change Hancoin to Korean won was strictly illegal at that time.
Right.
But there were so many illegal traders who exchange Hancoin to Korean won.
Okay.
So,
But,
yes.
but as you look, so it is interesting that, you know, a lot of the folks have come out of this gaming, and you guys at Crack Can Do, I think you kind of came out of gaming as well.
Yeah.
But as you're looking forward, though, what are you investing in now? Like, what's interesting to you now? I want to kind of pursue this use case, and then I'll go to you.
Yeah. So there is a revolutionary payment application in Korea, which is growing very fast. Name is Chai Pay. So Chai is a payment application. You can imagine such as PayPal-like payment application. But Chai use blockchain network named Terra, the stablecoin network. So most of the payment application charge between 3% to 4% to the e-commerce and merchant. Chai only charge 1% of fee. So they already had a major partnership with the number one convenience store in Korea, number one hospitality service in Korea, and some of the leading e-commerce players in Korea. So they launched their payment service within 7 months and already have more than 1 million of users. And actually, they are growing very fast. So
Okay.
they are growing more than 35% month by month.
Wow, that's amazing. Okay, let me keep, Mike, you have said, I don't want to put words in your mouth, but kind of like store of value is really the use case. Is that really it for you? Is it digital gold or is there more?
No, not at all. So I think, listen, Bitcoin, I think, is a cottage industry and it's a finished product. And so I think that's going to grow just like gold grows. I don't think central banks are going to care about it. Like the central bank doesn't care that gold's $9 trillion, and they wouldn't care if gold got to $13 trillion. And so they're not going to care too much about Bitcoin. What they will care about is the chain analysis stuff, money laundering. And so we spent a fortune on KYC, AML, financing terrorism, the same stuff they would care about in normal money.
Yeah.
Outside of that, I would break the blockchain into kind of 3 buckets. One bucket is the protocols, so trying to build this new trust level, and that's where Ethereum and EOS, Dfinity and Hashgraph, all fighting to be part of what will be a decentralized supercomputer that really processes information. And there'll be a new economy built on top of that. My gut feeling is we're not going to know the winner for 3 to 5 years. I'm not positive it's going to be winner take all. The winner is going to be worth a whole lot of money because more and more of the world will get built on top of a trust protocol. What we're investing in now, before that, is almost every company we talk to and almost every industry we look at is working on private blockchains to solve a problem. So let me give you 2 examples. Ticketing. Right now, if we're a Korean boy band, he's the lead singer, and we want to sell our tickets, and you guys are the concert goers. We put the tickets up on Ticketmaster, and within 1 second, all the tickets are sold, and 95% of them are sold to bots, to little computer programs that buy all the tickets. And then they resell those on StubHub or some version of StubHub at a giant premium. So the artist doesn't get that gap of the money, nor does Ticketmaster get that gap of the money. It's going to some unknown computer hackers. That doesn't make the artist feel good. It doesn't make anybody feel good. And so that whole industry is going to get transformed in the next 2 to 3 years, where all those tickets will be sold on a blockchain. And you'll know exactly who's bought the ticket and who you're going to allow to buy the ticket. And if I want to sell the ticket in the secondary market to my left or to my right, that transaction gets put on the blockchain. And now that gap between what the retail price would be and what the hyped up price would be can either go to the artist, it can go to a charity, it can go to wherever they want it to go. And so there are 3 or 4 really cool projects being worked at. Ticketmaster's investing in them. And you can bet your bottom dollar that in 2 or 3 years, all our tickets and that industry of people making money by front-running tickets will be gone. We're investing in lots of projects. We just launched a venture fund we've been doing it off our balance sheet that are really blockchain-based. Some will be built on a public blockchain in time, but almost all are starting on a private blockchain. And so it's that technology that becomes the DNA of the overall space. But I think that's, like other venture bets, it's kind of a SaaS bet with a blockchain.
George, what do you think? Where do you think it's going, and where do you think it's kind of the most interesting use case? And if I could also, could you bake into your response this? You've mentioned AI and your investments in AI a couple of times, and what does that mean, and how does that work into your?
Yeah, so I agree with Mike. There is definitely a sense that Bitcoin has emerged as the sort of a TCP/IP protocol. It has the most compute power, most coders, developers, applications. It's the only sort of a censorship-free. It hasn't been rolled back. It has withstand the attacks. It's safe, secure, and sort of considered as a rock of Gibraltar onto which there's going to be a lot of applications are being built. Because as a developer, as an investor, you want to make sure that you want to build a foundation on a rock of Gibraltar and not on a quicksand. That's very important. I think that as time evolves, just like an internet, you have TCP/IP, SMTP, HTTP. There are, half dozen or so protocols. Same thing is going to be in a blockchain. And some of the names that Mike has mentioned definitely do have a lot of moat, so to speak, to be there. In terms of you said
The AI,
yeah.
yeah.
So for us it was the panel that you mediated, the one before this talked about sort of the applications of AI and governance and all this. I think blockchain can be the tool, the public blockchain can be the tool that brings back the power and the ownership of the data to an individual.
Okay, tell me about that.
You can take it back. Right now, a lot of the data is concentrated in sort of in few of the kind of centralized points, and you see a lot of upheaval that's happening globally. I think blockchain can be the technology that can build the trust into the system, and the trust comes from one simple thing: transparency. When you shine the sunshine onto a kitchen, so to speak, all the cockroaches run away. As an old saying, I don't know from which country. But this transparency will allow you to, as an individual, take a data back and then monetize the data. So probably in 10 years' time, there will be a blockchain-enabled Facebook. There will be a blockchain-enabled Amazon. There will be a blockchain-enabled eBay, so on and so forth. And that's very important transformation that's taking place. In my opinion, just like those companies took the power back from the analog industry, blockchain is going to be, the next layer of it. And given all the data that's out there, then you're getting into how you start monetizing the data and how you start kind of combining the trust element to making the best decision with the valid data that is trusted. So for us as a company, given that our roots are in chip design, and a lot of innovations and patents that we filed in, working on low voltage. Bitfury broke all the world's records basically on the low voltage. We've made our Bitcoin chips on 0.3 joules, which if you look at NVIDIA and others, 0.6, 0.8, because we had to be super efficient, and we believe we can take that capability and now apply to AI, where everything is going to be compute power per unit of energy, and for us it's a natural transition.
I see. So you could use the efficiency of your core technology even for non-blockchain related AI uses?
Yes,
I
that's
see.
correct, yes.
I see. That's interesting. Okay, when George talks about sunshine, I think of you maybe as the sunshine on the panel here. You're driving the cockroaches away. Can you tell us a little bit? Obviously, you don't want the bad guys to know, your secret sauce, but like, how do you do it? How do you not just kind of like filter transactions? Like, how do you? What are you looking for? And then also, if you could tell us a couple of maybe stories, a couple of anecdotes about one in Korea. I know as well that is quite famous, actually, but.
Cool, yeah, definitely happy to do that. So shining light on everything. So basically, a couple of years back, we got, and this is like trying to explain how do you actually solve a cybercrime case, what is actually the steps involved there, and how could it start. And this is like one of the real cases. It's actually the biggest child abuse material site ever that got taken down a couple of, basically a year ago, but it was showed to the public a couple of months ago.
I see. So it was all secret for a while before you.
We were secret for a while around that, yes.
Okay.
So we could, again, another case that we couldn't talk about for a long time.
So tell the audience a little bit about what that was and how you.
Yeah, so the case was Welcome to Video, it was called. So it is basically a site on the dark web, you need to download a Tor browser, and that means you can be reasonably anonymous on the internet. And people who want to download child abuse material, they definitely want to be anonymous. So they did that, and they found the site. You can find that on the dark web. And then they would actually pay with Bitcoin to get material or get material produced. And we got a lead from one of our collaborators, Internet Watch Foundation. And they send us typically leads that they get from various sources, and suddenly there was these Bitcoin addresses that turned up to be a nice big wallet. And we looked at this wallet and could see transfers coming from a lot of different countries, from a lot of different exchanges and so on. And we were first like, this can't be true, because normally people in that category, they have very high OPSEC, so they really try to stay really anonymous, but apparently they felt Bitcoin was reasonably anonymous, so they were all there. So there were more than 300 people that we could see had been transacting with the site. So we shopped it around to different law enforcement agencies and started working with one of them. And it became a very big case. Building the case material took a long time because it was a lot of people involved here. And then after a while, the site got taken down, people got arrested, there's still arrests going on. Ended up rescuing more than around 30 kids and getting like 300 people put to jail in a lot of different countries. The interesting thing about a case like this is like it requires collaboration between so many law enforcement agencies worldwide. And one of the things that has happened in the crypto space at least is that we have been more or less become like the anchor point where we can shop the information around and basically enable these agencies to work together. And one of the things that also happened with crypto is that crime has become more global, so you definitely need ability to contact people from different countries. So this is like one example. We have other examples of high-profile cases. There was a hacking of an election where we definitely saw some crypto being part of that as well. And latest, some of the bigger things have been scams. So scams are relatively simple. Some will say that all crypto are scams. I would say it's not. But definitely trying to get people to buy a certain asset, and then you take that asset and give to the first ones, and then it grows, and then suddenly you have, at a certain point in time, no one gets any more, and you keep everything. So that's how the Ponzi scheme typically works in crypto, and there's been a lot of them. And what we've seen there on the Ponzi scheme side has been that none of the OTC traders, smaller OTC traders, they have probably been approached by people from a Ponzi scheme. They wanted to cash out, and they were willing to sell big blocks of Ethereum or Bitcoin for a lower price than market, and the OTC trader was just happy to do that and didn't ask further questions. And as they already had an account on an exchange and been vetted by these exchanges, suddenly these exchanges got implicating in second-level money laundering that way. And it's kind of a good thing that this happens in the industry, because it just shows that the exchanges today mostly are actually doing a pretty good job of compliance. They even vet their customers, but they don't expect their customers to do bad things like at this scale. So they need to up their compliance program even further and become more like banks this way. So it's like a maturing of the industry. And I think one of the interesting things about how this industry and this asset class grows is that it kind of grows the other way around than what we've seen before, because it started really from the grassroots. It was really like cyberpunk movement. A lot of people with not that many funds and money available started to grow it. So I usually like to say that what we are trying to do is financial inclusion, but to make it grow, we need to include those with more money instead of those with less money. Those with less money already have access.
You know, I want to say something just to make it clear to people. And so in 2017, and actually almost all the way through today, what most cryptocurrencies are speculative communities. And so when I said Bitcoin was a social construct, it's a community of people who have gotten together that said this is worth something. Well, each of these other cryptocurrencies, however small, said this is going to be worth something because one day it's going to do X. And where the scams have come in and where people have lost lots of money, and where I urge you guys to be careful, is when it's a small group that they say we're going to sell 10% of our cryptocurrency, and then we're going to sell 10% more, or even 50%, and 2 or 3 people own the lion's share of it, and all of a sudden they price the market cap of this new community of people that they've just sold a little bit to at a high level. They see in their head, oh my goodness, I'm worth a whole bunch of money. And if I can only sell a little bit, I'll be rich for the rest of my life. And so the incentive structure for them to pump up the market, to do very shady things, is very strong. And so what the SEC in the US has been doing is hammering a lot of these guys. And so they've paid exchanges to create fake volume. They've paid exchanges to list them and hype them. And, you know, there's a fine line between organically developing a community of people that believe your shiny object has value, right? We do it in all markets. The art market, there are great art salesmen out there. They're usually beautiful women that know a lot about art, or guys with big charisma that know a lot about art, and they ply you with drinks and say, oh my God, let me talk to you about this Picasso, and next thing you know, we're all believing it's worth so much money. You know, so that's what speculative communities do. And you've got to be very careful because there's just not enough bandwidth. So these smaller cryptocurrencies, these smaller speculative communities are much more likely to be here today, gone tomorrow. And when I keep saying this is a venture bet, there are some great projects. Matter of fact, the best scientists and the best entrepreneurs aren't working on Bitcoin. They're working on these other projects. The real revolution that happens in 5 years when we have this distributed trust level and shit is most likely not going to be on Bitcoin. It's going to be on Ethereum most likely, or maybe one of the other protocols. And so I'm not discounting those. I'm saying look at those with a longer term lens and be careful where you're betting. Make sure there's a great project, that there's a way that the coins, if there's coins involved in the project, get distributed in a fair way and get distributed widely. Because when one guy's got a whole lot of the coin, it's also some of the magic of Bitcoin, right? Gold came from the gods. It came from the ancient, Egyptian gods and the Incan and Aztec gods, and they thought it was something magic. If we knew who Satoshi was, Bitcoin wouldn't be Bitcoin. Some of the magic is no one knows how it got there, right? It's a line of code that got put in the water and in a basket and floated down the river. When you know one guy's got 80% of the coins, and you're like, we're getting him rich just because of what? It's just, it has a different emotional feel to it.
Right.
And so I really believe Bitcoin's kind of a miracle that it's where it's at. And I think the rest of these things really are going to have to prove that they do change the world. And one or two will.
Yeah, not to mention you go and you have gold, you got to dig down, 2 miles into the ground, you get shot at on your way to the helicopter, fly it to the Bank of England, dig it down 2 miles in the ground again, getting shot at on the way. It's like dangerous, This is digital, and we do a lot of work on capital market development. I always say there has never been a capital market anywhere in the world, anywhere in time, that has been built on the back of perfect investor protection. It's just, it doesn't happen. It's a bit of a Wild West always when you start. You two, I promise to get back to you one more time, but let me just pause here to see if there's any questions from the audience so we make sure we have enough time for that. And I'll collect them kind of quickly together. So stand up, introduce yourself, and just ask a question. Do not make a speech. Okay, number one. Yes, over there. Stand up, yep.
So what are your thoughts on the Telegram network case and their ongoing battle with the SEC?
Okay, and I'll take one more. Is there one more? Okay, great. So why don't we, yeah.
Let me take a quick shot at both of those because I've thought a ton about these things. I was praying for Libra to work. Libra did two things. It was a shot across the bow of every regulator and central banker in the world that said, oh shit, this stuff's real. It had been a pet project before, and all of a sudden it had a potential of 2.5 billion people using it, and everyone freaked out and said, we're not ready for it yet. Unfortunately, Facebook has the biggest deficit of trust of any company in America, and so to be the potential trusted, blockchain just wasn't flying. There will be government-issued stablecoins in the next 2 to 3 years. The U.S. is thinking about them. Japan is way ahead. China is working on it. And so payments will end up being done most likely on government-issued blockchains or government-driven blockchains, which will change the entire infrastructure of payments. And so investing in ChainAlysus, I'd buy more of his shares because you're going to need custody. You're going to need security. You're going to need staking businesses. You're going to need a whole new trading businesses. One reason we're building out the trading business. And so when Libra and then Telegram both got karate chopped by the SEC, I cried, like tears, because we've been building this business and we needed that liquidity. Telegram kind of got screwed by Libra. If they had launched 3 months earlier, the SEC would have let them launch because they kind of checked most of the boxes that all these other cryptos that got through the gate did. They distribute it only to wealthy people in the US or abroad. They had Sullivan and Cromwell, or Skadden Arps as their lawyer. They were very careful to do it the right way. And the SEC, because of Libra, said, wait a minute, now we're nervous. And Telegram's 300 million people. It's not 2 billion, but 300 million is a whole lot of people. And I don't think the SEC is going to, as much as Telegram's working to try to negotiate their way back in, when I read what the SEC said about centralization, in this case, you know, the founders of Telegram are going to still own too much of the coin. It's going to feel too much like a security under those old 1938 laws. And so the laws need to be changed. They're not. We need new people at the SEC. And so Telegram's in a really tough position. They either have to launch outside of the US and hope the US doesn't come after them.
All right, so I've got a couple guys waiting to get in. So Mike and George, you both wanted to, and then
Yeah, just commenting on, both of the questions. On Libra first, I think that one of the things that we saw with crypto, Bitcoin, all the other cryptocurrencies, is that we saw that it was actually possible to have a permissionless value transfer network and run this in a reasonable, secure way where you had transparency and that it worked. And that's been shown, and that's why we've seen them grow. And that's like also why the idea comes in for building coins like Libra, say, hey, let's do this in a semi-centralized way where we can actually make the network scale way better and use our distribution channels to make it happen all over the world. And I actually think that's a good idea, fundamentally. And I also think that that's something that's going to fly in one version or the other, whether Libra is going to be the thing, or whether it's going to be a Chinese version of that, or whether it's going to be one of the other 5 projects in Asia that's like of similar size. Some of this will definitely happen, and that's for sure. And if you look into the question around SEC, I basically agree with Mike on that matter. So they need to do enforcement actions on certain things. I would say we saw, as I mentioned before, we've shown how to run a permissionless value transfer network. We haven't seen how to run securities and selling securities in a good way without everything going crazy. So the ICOs, there was actually a time where SEC didn't do anything. And it could have been that the industry managed to kind of regulate, that something popped up, that it may enable them to say, well, this is another way to do securities. So if you do A, B, and C and not just the Harvey test, then it might work anyway. And the interesting thing about securities, there's this loophole that you mentioned, Mike, which is actually selling tickets for the boy band. And the bots, they buy them because they think they will go up in value. So that's a security. But you're actually allowed to do that today. So there are definitely loopholes in the security law where sometimes we actually accept it anyway. So I think if that can be solved, like through technology, how to regulate securities or show that it can be done in a better way, then we have another matter. If you break the law today, there'll be enforcement action.
yeah,
Couple of
George,
quick
and then
comments.
go right
So,
down the line. Yeah.
Yeah, Telegram, we've invested privately. You know, the world doesn't start and sets on the United States. So actually about 75% of investors are non-American investors. So Telegram is perfectly fine to kind of say sorry to American investors, goodbye SEC, and focus on sort of a non-American business. Pavel is a warrior. He's built successful businesses, and he's going to carry on building this very exciting project. And he needs to hurry up because there is Libra. Now, there's another sort of a hustler and a person that's very stubborn, is Mark, right? So he'll definitely do it, and he has one primary argument. Look what's happening with WeChat. Look what's happening in China. It's a miracle application that basically everybody, if you are a Facebook or Google or Twitter, you're salivating over it. So if he doesn't do it or the Western countries don't do it, the WeChat is coming for sure. And second, I think the slowdown is, in America you have K Street lobbies. They do wonderful job of slowing new technologies or anything to undermine. And actually, that's natural. They're protecting their turfs, the JP Morgans of the world. So to a large extent, they played on the boogeyman of trust. And obviously, there is this issue with trust issues Facebook, but it's definitely establishment fighting, because if Libra is successful, guess what's going to happen to all these transaction fees, overdraft fees, remittance fees, Western Unions, MoneyGrams, JP Morgans and stuff. They're going to go down to zero. Just like same thing what happened to fixed line telephony. You call from Abu Dhabi to New York 15 years ago, it costed you, I don't know, like couple dollars. Now it's close to zero. Same thing is going to happen to money transmitting business and moving value. So, of course, the establishment is very much worried. But my bet is on Libra, and that's going to persevere and be successful.
Okay, Simon, bring out your crystal ball for us.
Yeah, so we might agree that Libra and Tone will delay a lot due to regulators and extra. But I want to emphasize two similar projects in Asia already launched their mainnet and will make a huge gateway for mass adoption. So one is Clayton from Kakao Talk, and the other one is Link from Line. So you might heard about Kakao and Line. Kakao is a dominant messenger app in South Korea, and Line is also dominant messenger app in Japan and also Southeast Asia. So literally every single people in South Korea and Japan use Kakao Talk and Line every single day, like as a WeChat or something. So they already launched their network, and they will integrate their crypto wallets and DApp browsers on top of their messengers within a few months. That means every single South Korean people and Japanese people and some of the people in Southeast Asia, more than 200 million, will jump into the crypto space without any specific knowledge how to manage their private key or how to manage their DApp browser or something. So the Lear project already launched in Asia, and that's the reason why you have to start paying attention to Asia.
I see. So you're saying they kind of will start with messaging and then piggy on the back of that without even. That's very interesting.
It's a great point.
And then, but I do want to end with. I want to give Navin the last word because you've been. If we have time, we'll come back to you, Mike. But you've always talked about kind of the payment space and micropayments and the potential for financial inclusion. So give us your. And then when you finish, we'll go right down the line for a crystal ball comment from all of you.
Perfect. So just a very quick example. Today, FT.com, the only choice that you have is to subscribe to FT on a monthly basis. You have to pay $60. But actually, what a FT would like to do is give you the right to read that one article that you just want to read once a week, once a month for 10 cents. The problem is there is no payment system in the world that can collect 10 fills, 10 pence, 10 cents from you and give it to FT, though hundreds of millions of people want to do it. And that's a fundamental problem Ripple, along with XRP, is solving, where you would have a wallet in your browser where you keep $55, $10 worth of XRP, and then information will flow on one side and money will flow on another side. And we're not talking just about cent, but probably a microcent can flow at almost negligible cost. And to my mind, that's a fundamental change in the way monetization works today, because otherwise they're selling your data or they're making sure that you hit with a paywall and a large check. So then the content can be pushed out to billions of people around the world. And when so the protocol layer and the application that we are building on the top of it, there'll be developers in this room and around the world that will then build on the top of XRP ledgers to solve problems like that. And that's where I see a fundamental shift in the world, and that will be the email movement. What was for internet will be for cryptos, because then it's mainstream. It solves a problem that you guys grapple with every day.
Okay, so 5 minutes remaining. 5 years from now, what are we going to be excited about, and where are we going to be down the line, bullet round, starting with you, Navin?
Remittance will be like you move money within the country itself. It'll be instant 24/7. You'll be able to send money to anybody, wallet to wallet, across the board, in a fully compliant and a regulated manner, and at a fraction of a cost what you send now. 100%.
All right, Mike Novogratz.
1999, we had the internet bubble. We didn't get Facebook till 2006, the iPhone in 2006 or 7. The great transformation of the world happened 4 to 5, 6 years later. You're going to see the same thing in crypto. All of these projects that these guys have talked about, they're fighting to happen. They're going to happen, maybe not this year, maybe it'll be next year. Some of these are experiments, and some of these are going to be full-fledged projects. A lot of that energy is going to show up in Bitcoin in the interim, because as people say, the crypto universe is here. They're all going to start with Bitcoin, and so get some Bitcoin in your portfolio.
Okay, Simon, tell us what's going to happen 5 years from now.
So I think this year should be the turning point of the entire blockchain and crypto market. And we are seeing the Lear decentralized application to the mass users, especially in Korean market and some of the Asian markets. It's already started. And these days, we are very excited about the decentralized finance or open finance. So they have a huge potential to rebuild entire financial industry. So we are very excited about that makes happen.
Okay, George, you always put your money where your mouth is. Where you?
I'm very subjective. I'm a Bitcoin guy, so I was here 4 years ago and meeting with local leaders. Bitcoin was 300, 400. I gave them thesis why it would go where it is now. Basically, I'm even more bullish. There are two things. First is the diminishing supply of Bitcoins emitted. It's gonna be less than that of gold. And very importantly, if gold goes to 1 million, supply of gold will probably go 10, 15%. If Bitcoin goes to 1 million, supply of it actually will diminish. It's said by the algorithm. And second, I think in 5 years, there's going to be close to 1 billion Bitcoin users. There are about 100 million now. This is a technology for the masses and empowering individuals, and I think this is a technology for emerging markets or the other 99%. So I firmly believe that in 5 years' time, it's a billion users of Bitcoin, and the future of the blockchain is going to be even brighter than it is today.
Okay, Mike Reniger, last word.
So I think that what we're going to see, so basically crypto and the ability to transfer funds this way, this is like the energy layer of the entire internet and for all devices that we have. So I think if you go 5 years ahead from now, we will see basically all devices that we own, they are transferring value between each others in an opportunistic way, and it also means that the majority of all transactions happening on blockchains will be done by devices.
Okay, all right. Please, everybody give a hand to my amazing panel. Thank you so much, gentlemen.
Thank you.